Hello everybody, welcome to the channel. My name is Domenico and today we're going to be talking about, is it a good time to buy, hold, or sell stocks? What my opinion is on the current economic situation and the stock market levels according to this data. So getting right into the video, since the market lows on March 23rd, stocks have been soaring and it seems like every day is a green day in the market, which seems really strange when you think about a market that is going on during a crisis, a global pandemic. So we're going to be looking at some data according to some unemployment situations and some valuation situations in the market. So first we're going to look at a few reasons why the market is actually going up during this pandemic. Even though the world seems to be turning upside down, the market is still going up. So why is this? Well, there are a few reasons. Number one, newfound optimism due to Moderna's vaccine. This caused the stock market to soar higher. I think about 4% today was announced, so that's a big part of it. Number two is there's nowhere really to put money other than stocks. I mean, if you look at bonds, they have extremely low yields, and anything safer than stocks, basically, there's no yield to be found. So big funds have to put money in the market, and that's really the only way you can get a decent return for your money, at least in the long term. And third is a FOMO by large institutional investors such as hedge funds and mutual funds. So basically, they really don't have the capacity to find better deals than the average market because of their huge market caps. So if they have so much money to put in, they can't really invest in small companies. They have to invest in large companies. If they lag the broader markets, basically the investors are going to pull out their money and put their money in index funds. So basically they have to at least do as well as one another, and that's why all of them are trying to get all their money into the market right now, so they at least have an equal playing field. Something interesting that we have to look at is that Warren Buffett in his last quarterly report announced that he hadn't bought any stocks, and actually he was a net seller of stocks, and that's actually one of the first times I've seen Buffett as a net seller of stocks, especially in a crisis. Usually he's known for buying stocks when the stock market dips, but in this case he actually sold his stocks. So that should tell us something about how he sees the future. And since he's a very long-term investor, he basically sees this affecting the global economy for quite some time if he's taking some money out of the market. Also, Berkshire is invested in a ton of companies, so he has a lot of data to look at based on the economic situation. And if he's pulling out money, it means what he's seeing, maybe he's seeing something that the rest of the market isn't. Now, I want to look at some PEs. The P ratio, the average P ratio is about 21 right now, okay, in the S&P. But the valuations for stocks based on earnings, future earnings, that's the P based on the earnings of 2019. But in 2020, based on the earnings of 2020, due to them being cut at least in half for most companies, the valuations are soaring to 18-year highs. And that's amazing to think about. I mean, if the stock market is at 18-year highs and is still climbing, there's something that's quite unsettling in those figures. Now, when we look at this, we can see that stocks are very richly valued, and due to this, I don't see it as a potential buying opportunity. But now we have to talk about whether it's a selling or a holding opportunity, because there's a massive difference between selling a stock and holding a stock. Selling a stock is completely getting out of the stock, and it can mean that if the stock goes higher, you're missing all the potential upside. But then if the stock goes down and you're holding it, you're going to have to hold it for a while, or at least until it recovers, or you're going to have to take a loss. So there's two very different things, and we're going to talk about which one I believe you should be doing right now. So there are a few situations where I would want to sell a stock. I would want to sell a stock if I don't have enough cash on the sidelines, especially right now where I feel like the market isn't on stable soil and can easily be ticked off just like that. I would like to have a good amount of cash on the sidelines, and I do, so I'm not worried about selling stocks right now for that reason. And for that reason, I might be holding most of my stocks. Now, another reason I would sell a stock is if they reached full valuation, meaning at the beginning of my stock investment, I look at a stock and I basically value it and I give it a certain value. And if ever that stock reaches the value, even before that point, I will sell, because that's the full value of the stock that I predicted. I don't care if it goes higher than that. The value that I predicted, let's say for a stock is $100, and it reaches $100 before even my thesis plays out, I will still sell it because that's the value I see in that company, and I won't speculate on whether it'll go higher or lower in the near term. That just gets into trading mentality, and that's way too complicated for me, and I'm just a long-term investor. So I give each of my stocks a value, and when it reaches that value, I sell. Okay, and if it doesn't, well, I'll hold unless something changes fundamentally with the company. So basically, the only situation where you should be looking to sell stocks is one, if you don't believe in the company anymore, if the fundamentals change due to the pandemic, if you see them not being able to survive, whereas you didn't think that was a possibility maybe a few months ago, well, then you can sell out. Or if you see that you're low on cash and you think the market is unstable and at these levels it's very easy to get back into another crash, well, then you want to hoard some cash. You want to keep some cash on the sidelines. You might want to consider selling some of your positions, not all of them, but maybe trimming your positions a little so you have some cash on the sidelines. I like to stay around 10 to 20% in cash at all times minimum. And if really is no deals, I'm in no rush to buy any stocks. So at this point, I'm about 21% cash. I really don't see any deals. So right now, I'm not really buying anything. I'm not selling anything either, but I'm not buying anything because, I mean, there's really nothing I can find. I'm always looking into new companies and there's no good deals out there for the valuations. I mean, valuations are crazy. Just Amazon and Facebook just hit record highs. I mean, Facebook is still a buy in my opinion. It's probably the only stock I hold that is still a buy at these prices. Something to look at when considering if a stock is fully valued or undervalued is usually the indexes. You want to get a full idea of how the markets are reacting to the situation. So if we look at the NASDAQ is up 4.49% year to date, meaning since the beginning of 2020, the NASDAQ has gone up 4.49%. That means since before even the pandemic struck, okay, the NASDAQ is higher than it was. That means that basically the NASDAQ is thinking that the pandemic is going to help the stocks in it. Now, this could be the case for some tech stocks in the NASDAQ because people are staying home more, so they're using tech more rather than going in the outside world, such as being in the office. But still, I mean, even though people are shopping on Amazon, I don't think they're shopping more than they were because they're home. I mean, a lot of people are losing their jobs. Unemployment is going to reach 25% according to the Fed. So that's incredible to think about, that these stocks are up 4.49% year to date. Okay, thinking about everything that's happened in 2020. Now, the average PE in the NASDAQ is 30.9. That's extremely high. I mean, if you're thinking about average PEs, usually want to be in the 20s, if not 15 to 20 range. That's usually a healthy range. 30 is extremely high. Basically, you're pricing in a ton of growth since last year. And now companies might actually be losing earnings from last year. So, I mean, if you're looking at a decline in earnings and a increasing stock price, it's just a divergence that I simply can't understand. Now, if we look at the S&P 500, the S&P 500 is down, but still it's only down 8.02% year to date. Considering the entire massive impact this pandemic is going to have, the ton of bankruptcies that are going to occur because of it. I mean, the S&P 500 takes into account 500 companies, and they have an average P of 25. S&P 500 takes into account 500 companies. The average P of the 500 largest companies in America is 25. Okay, so I can see the pandemic helping certain companies, but does it justify an average P of the entire S&P of 25? I don't think so. Okay, that's an extremely high P ratio, and I do believe it's going to come down a little bit. So that's why I'm not really buying anything right now, and I'm just going to hold what I already have because I do see them as still undervalued for the future long-term potential. So it's quite a scenario out there, and you're going to have to think about that when deciding whether you want to hold or sell stocks. Now, holding is one of the best options you have for the long term. If the company does well, you'll do well. Most companies will get out of this pandemic fine, and also the stock market includes most major companies. So the companies that are hurt the most from this pandemic are usually the smaller companies. And now when smaller companies are hurt and they go bankrupt, well, then the companies that benefit are the larger ones, and those are the ones that are listed on the market. So if you're looking to benefit from the pandemic, usually staying in the market is a good thing. And in the long term, for sure, it's going to be a good thing because the market always goes up in long term. The only thing to be careful of is if valuations are way too high, and if you see that the stocks are fully valued, try trimming your positions and taking some money off the table so at least you lock in some profits. You don't want to stay with some profits when you see that the valuations are extremely rich and that the stocks have gotten overvalued, and you just don't want to be holding them when they're overvalued because then it's just speculative and you're betting basically that the price is going to continue going up or it's going to go down if you sell. So don't make short-term predictions. This game is a long-term game. You don't want to make short-term predictions. Make predictions based on the fundamentals look at the fundamentals. If the fundamentals change, well, then you're gonna have to reevaluate your stock positions. But as for now, I mean, I see most of my positions as a hold. I don't see too many of my positions reaching fully valued, because I do purchase my stocks at fairly undervalued prices. I mean, at least 50% usually from their fair value. So guys, let me know what you guys are doing in the comments down below. Let me know if there's any stocks you guys are looking to buy, or if you're selling any stocks or shorting any stocks even during this market rally. So if you did enjoy the video, don't forget to leave a like. It really helps out the channel, and subscribe if you want to see more videos like this in the future. But until next time, have a great day.